Welcome to Central Bank Central. I'm Kathleen Hays, here at the AEA, the American Economics Association Annual Conference this year in Philadelphia, with a very special guest. Ken Rogoff, happy to have you here, professor of economics at Harvard University, former chief economist at the International Monetary Fund, and considered, I want to sum it up, one of the go-to guys when you want to understand the global economy. And a book. Another book, one that's raised a lot of issues kind of before people were aware of how big they were going to be this year. It's called, as you can see, Our Dollar, Your Problem, an insider's view of 7 turbulent decades of global finance and the road ahead. So, again, great to have you here.
Well, thank you for having me. It's great to see you. You've interviewed me so many times over the years.
Yes, and
it's a pleasure to meet again.
Well, thank you so much, Ken. And of course, you just had a part of a big panel looking at dollar, tariffs, et cetera. In the preface of the book, you say that the U.S. dollar is at a critical inflection point not seen since the early 1970s, and the era of dollar dominance may have passed its peak. So what's happening now, 2025, 2026, that begins to rival what happened 50 years ago? Bretton Woods, U.S. went off the gold standard.
Well, I think there are many reasons to think the dollar might have peaked 10 years ago, and I think there are a number of indicators that suggest it has. Not everything, but certainly when you look at everything from reserves to what central banks choose to stabilize their currencies against by a lot of different measures, it was in gentle decline before Trump. And I should mention, I finished my book before Trump was elected, they let me add one paragraph to the end. And a lot of people asked me afterwards, how did you know? How did you know that's what happened? But I thought Harris was very, very weak also. I didn't say Trump's weak, but I thought they both had things which would probably not promote the dollar and might destabilize the system. It's complicated, so it's not like we know, particularly with Trump, we don't know their pluses, their minuses, but the big thing was that part of how the dollar became so dominant is that China adopted the dollar, essentially. China's now the second biggest economy, but also it's the anchor in Asia besides the United States. And Asia is actually half the dollar bloc. That's hard to believe.
Yeah.
Europe, back when Nixon went off the gold standard, was most of the dollar bloc was Europe. There other countries that were sort of in and out and not really so important. But today, Asia, of course, I don't know the number off the top of my head, but it's something like high 30s, 40% of the global economy. It's very, very big. And it has been very dollar-centric. China, for many reasons, is moving off of it, for macro reasons, for security reasons. And so it was in this decline already, and then multiplying that, I think, are concerns about U.S. central bank independence, U.S. fiscal stability. So I think it was in gentle decline before Trump, and he's certainly shaking things up.
Well, then let's start with that Trump part, because that's certainly one of the things that I would have to say, in fairness, whether you're a Trump supporter or not a Trump supporter, you can tell that, a lot of the things he's done and said have concerned people about, multilateralism and all these kinds of things. So when in your talk, you just gave sort of pluses and minuses. Or are they all pretty much minuses?
No, there were a lot of pluses. So one plus is he's all in on artificial intelligence. I personally think this will be what he's most known for, better, for worse. I would go slower. I would have more regulatory safeguards, particularly on what we call safety, which is a very broad term. Everything from civilization extinction events to the use in terrorism, to it being used like social media, which I think has become a big negative in many ways, and AI will be more. And those safeguards are just gone. And one of the things he did is he said, don't worry about copyright. Don't worry about intellectual property. No one, Can you imagine if I could have started up a firm 25 years ago and the president told me, you can just take anything of anybody's and nobody's, I could produce a pretty valuable firm. And so I think the arguments we have to beat China, I hear it, but on the whole, being first in AI is good. I would say another thing was leaning into hard power. My book actually talks about this a lot, and the progressivism which dominates the AEA meetings is pretty woke, I would say, and nobody favors military, and fine, I don't either in a way, but if you want to be the dominant currency, you have to be at least one of the couple dominant military powers, and for reasons that I think I explore in the book that most people don't think about.
Well, in terms of the dollar directly, is there anything particular? Is it? What about tariffs? How much did that affect the dollar? Because I agree with you. I mean, I'm defense, military power. It isn't just maybe important to protect yourselves, right, in a world like this, but also it does give you strength.
It gives you leverage over negotiations, over how the IMF is organized, how the global banking system is organized. And even though Trump is very blunt about his views, believe me, if you looked at Lyndon Johnson, Nixon, Reagan, they were saying similar things in the back room that, nope, we're going to do it this way, and gives you a lot of leverage. But yeah, there are many negatives, so I didn't come to them. And I would certainly say tariffs is a clear negative. I don't know it's the biggest. But in the extreme, if you build up a big enough tariff wall, you lose your ability to integrate financially. They're related indirectly, but it's very clear if it's just a total wall, you're not going to be the dominant currency because nobody can get in and out. But it turns out that that's true to a smaller extent. Maury Opsfeld and I showed that a long time ago. And so I think if the tariffs are important, a former student of mine, Tarek Hassan, has a paper saying actually if tariffs get above 25%, go to the euro. That was a prediction. Also, I would say undermining the rule of law. I mean, it's not a simplistic thing to say he undermines the rule of law. And for example, Biden's open borders policy, what was that?
Yeah.
Sort of reestablishing borders is reestablishing the rule of law. So it's a complex thing to say, but I would say on balance, he's disrupted the system we have. And if you're a foreigner, you were kind of relying on that and getting repaid. We could, also look at things like his cryptocurrencies and support of that, which maybe in the long run won't be pro-dollar. I think we can come up with a number of things which are also on the minus side.
So in terms of 2026 and where things go now, what's going to be the big drivers? Where are we? Just, January 3rd here.
So we're talking on January 3rd. And I have to say, when I was in Davos last year, I was very contrarian and said I thought it would go well for Trump, but we'll probably have a recession within its first 2 years. That was what I said, because I thought some of his policies would boomerang over the long run. That was very contrarian. I didn't say we're going to have a recession right away. I said within 2 years. It's been a surprise to most economists, if they're halfway honest, how well it's gone. I mean, at least according to the numbers that the Trump Bureau of Labor Statistics produces, which are hard in the best of circumstances. And so, the economy is very strong going into 2026. I think, however, I expect a lot more volatility. Will it be good or bad? I don't know, but I certainly say the risk of recession during this year is still significant.
Well, Trump sort of backed off from tariffs to a large extent, right? I mean, is that less of an issue? There's all kinds of, and in fact, at this panel you were on, people, all kinds of models, how it varies, why it varies, the impact of tariffs, and maybe that's partly what Donald Trump is. He tries something, see how does it go. If he has to, change course, he does. And maybe, and there's a business investment's been good. People are still spending. That's why it's kind of even this year. What's going to make a recession if it's gone pretty well this far, and if the president he's focused on a lot of other things now?
Well, I think you pick on one of his best characteristics, which he's a pragmatist. And a lot of the progressive governance we've had at times is very ideological, dogmatic. We have to do things this way. Let's plunge ahead, and sort of not looking at what happens and responding to it. And Trump does. So to be fair, he's backed off some of the extreme tariffs. But as we also discussed at the panel, the tariffs are just a small piece of the various uncertainties surrounding, the presidential power, the independence of the Fed, the independence of agencies, how we make decisions. And we're not even a year into the Trump administration, and probably more has happened than in several recent presidential administrations. So I think there's probably going to be more uncertainty in the next year. I mean, markets have digested this. I think it's been because of enthusiasm about AI dominating things.
Big factor, yeah.
But I think this year markets will be much more volatile.
Because they'll be more uncertain. Because let's go to currencies. You've got a dollar that's came down about 9% last year. Was that what it was?
Depending on the
which,
measures,
yeah,
it's a little less by a lot of measures, but yeah.
And of course, you have a great chart of how it's really. If you go way back in history, so the dollar's come down a bit. But the question is, what's driving it, and where it's going to go next. Let me ask you something kind of economics nerdy. Current account deficits that have been very, very high for a very long time. Well, gee, we really don't have a free trade system if you bring in exchange rates, right? If you bring in the control, like right now, one of the big stories about China is it looks like they're manipulating the currency. They're keeping it nice and weak so they can sell stuff. How much is that a factor in here, and how much is it that is it something that is there and it's not going to change? And if you don't really attack that, then how are you going to get better trade for the U.S.?
Well, if we did get a smaller trade deficit for the U.S., it probably would raise our interest rates, because part of how our interest rates are low is that so much money comes in. There's so many models of exchange rates. It was my first really famous paper. It was about how hard it was to explain exchange rates, that at the time people said, oh, this can't be true, but it's held up very well. I think the one really powerful exception to it is when an exchange rate gets way out of line in terms of its purchasing power. There are different ways to measure it, but I think a lot of them say the same thing. The dollar's very high. It's been on a 15-year run, and as the chart you alluded to, I showed, it's come down like, the 7% sounds significant, but not compared to what it had gone up before. The dollar is still very high. And there's so many explanations, but in terms of the academic work I've seen, I find the most persuasive work by Elaine Ray and Vanya Stavrakeva, the latter is a former student of mine, arguing that the short-term movements up to a year are very dominated by equity flows. And there's just this period, money was just pouring into the United States to, get on the gravy train. And of course, last year that faded somewhat. But, what'll happen next year, that's not a long-run thing, so eventually that fades. There are other things like U.S. productivity's been better than Europe's, but it hasn't been better than Asia's. So it's hard to pick a single thing that we really understand. But I'll go back to the best rule of thumb that we have. It's not perfect. It's over long periods. If it's really expensive someplace or really cheap someplace, it's not going to last forever.
Well, gosh, you've touched a couple times. You brought the Fed, into your picture, and there's a couple of questions there. And I think one of the first ones is, yes, central bank independence, and how much does concern about that how much of that has really affected the dollar. And then, of course, the Fed, I just have to put a little aside here, at the last Fed meeting, they pulled that quick one, right, on Trump, it looks like. Oh, we don't have to worry about the Fed bank presidents getting reappointed because we just went ahead and got them in a position where they don't, we've already kind of done that. We've taken care of that. So I wonder and when Trump, he says it all the time. Oh, yeah, maybe I'll try firing Powell before I leave. He said that when he was talking in something recently. Do you think this is as much of a big deal now? Do you think Bessent, the Treasury Secretary, maybe has got a closer relationship with the Fed somehow? They're still very critical, but do you think it's something that people should really be worried about, that this is a big goal for Trump now?
Well, I first want to say that had Harris been elected, I was equally concerned about Fed independence. And in fact, we had seen this mission creep, which was very much from pressure on the Fed. The Fed shouldn't just worry about interest rates and the economy. It should worry about inequality, social justice, the environment. And this mission creep, which I talk about a lot in the book, I think was absolutely undermining its independence. So this isn't necessarily just a Trump thing. And we were seeing that all over the world. That's not just, we have to remember that central bank independence is sort of new. I actually think I wrote the first paper about it 40 years ago at this point, about why you should have an independent central bank, why it should put a big emphasis on inflation, why you might even want someone who seemed conservative to be running the central bank. So you asked about is the Trump, significant? Oh, I think very significant. I mean, are you kidding? I mean, I think he's going to have a big influence on the Fed, and if he doesn't like what's going on, it'll matter. As we speak, he hasn't appointed the new Fed chair, and I think that, is certainly will color the conversation, but I think within a year or two, it will be the Trump Fed. Now, that doesn't mean an end to the world right away. Well, no, it doesn't. I mean, it's new. China doesn't have an independent central bank by any stretch of the imagination, and they have low inflation. Japan, until not that long ago, wasn't really fully independent. It had the Ministry of Finance was represented on their board. You can go around. It really more is at stress points that happens. So it's not like you take away the independence, inflation goes here. It won't. It's more that you take away the independence and, we're not just going to invade Venezuela. We're going to go to war over X, or we're going to do this, or there's something from the outside which really creates fiscal pressures, and not just fiscal pressures, political pressures where it might matter. No, I take it very seriously, and I took it very seriously if Harris won also.
Yeah, well, and some of the people in Congress on the Democrat side more on pushing back on the Fed wanting to get out quickly, say, from its extremely stimulative COVID policies, right? Go slow, go slow. So I think that's a very fair and important thing to say. At the same time, so what do you think? So then, what when you listen to Bessent, of course, he's in the. I think you even mentioned this recently. The paper that he wrote for International Economy, or saw the writing of it anyway, about gain of function monetary policy.
It follows my book very much, has about that. I don't know if you saw, I wrote a piece in the most recent International Economy where I talked about his piece, and I say I'm very sympathetic to what he calls gain of function, which is very clever. I was calling mission creep in my earlier book. But I had said when he comments on the Fed, there's a lot of Monday morning quarterbacking about what they should have done when they should have done it. So he's very sensible. I mean, he's sort of the voice of reason. But even Bessent, I think, believes interest rates are going to come down more than they can.
Well, of course, I think it's interesting, too, when you think about their ideas and what they're doing, because if you bring down interest rates too much and inflation stays high, bond investors might just start getting less and less willing to hold longer-term treasuries, and of course they're pulling back from.
We see that.
Yeah, right. So what we do. So this is. I wonder then is that why partly? You just issue fewer long bonds, issue more bills, you turn them over quickly, and so even if inflation stays high or even goes higher, people will be happy that they do see the lower rates, and that might not even bring down mortgage rates for them, right? Make houses homes more affordable if bondholders don't bring the treasuries down too.
Yeah, so if you look at long-term real rates, they really haven't come down. So inflation index treasuries, they have not come down. And that's really that's the number the Fed has the most trouble affecting. The Fed can make the inflation rate 5%, it can make it 1%, but the question is what happens to those? It's a tough call, but my guess is if we get like a Trumpy Fed and it brings interest rates down very aggressively, which I would describe as experimenting with, well, what if we did bring rates down really low? I don't know that long rates will go up dramatically right away because inflation responds slowly. But what's going to happen is I don't think they're going to come down. I do think they'll start creeping up. So Besant has said, well, no problem, we'll just issue short-term debt. The problem with that is that interest rates might reverse course. We did issue mostly short-term debt for a long time. We had the shortest duration of any major country, and our our service on our debt, our interest payments have well over doubled in the last couple of years, on their way to tripling. That's because we borrowed so short-term. If we had borrowed 30-year debt at 1.24% or whatever it went down to, they wouldn't be racing up. So he's taking they're gambling that rates are really going to come down. And I mean, good luck with that. I think he's wrong about that.
Well, in terms of the Fed, let's step back for a minute. What's your take on where the Fed is now? Because they are, in fact, it seems to me you could almost argue that maybe they're already kind of bending to Trump a little bit, right?
Of course.
Right? And so if they continue to do that, if they continue to build inflation, in fact, who was it? Someone just said, matter of fact, their target's 3% now. Cleveland Fed has a survey of business expectations. It always used to say, they're looking for 2%. It just went up to 2.5%. So I guess everyone's kind of accepting that. But the Fed, of course, says, no, we're going to get to 2%. But they've been 4.5 years over the target, right? They're looking at the dual mandate and look how weak the labor market is, even though everybody knows that there's a big shift now because of deportations and migration and stuff. But bottom line, what do you make of this? Do you think the Fed's on the right track? Do you think this is ultimately an issue for them?
Well, if we look at the financial market expectations, it's not 3%. It's just above 2% or 2.3% or something.
Yeah, okay.
It's crept up, but not dramatically. And it's hard to know what to make of the various survey things. I think it makes perfect sense to respond slowly, to be on average. But look, of course they've bent. I mean, if let's just say Trump early on had said, Waller and Bowman, no way they will ever be Fed chair. Maybe their votes would be a little different. People campaigning for other positions. I mean, so, he already has some influence and I think has the potential to have more. And again, it's not a fast thing. In fact, a general point I would make is there are many things Trump does and kind of say, no, don't do that. Don't have the tariffs. Don't get rid of Fed independence. Don't look so corrupt as you're doing. This is terrible. Well, the thing is, these things aren't terrible right away. They're more like a cancer, I don't know if that's the right analogy, but something that, could get much worse later, but not right away. I call them negative structural reforms.
So does this matter to the dollar right now? Let's put it in the bigger picture of the question. Where's dollar going? Is this going to, if you think the dollar is going to continue to come off of this very high level, is that sort of a conversation but not a big driver?
So there are two aspects to the dollar. One is it used as a vehicle currency? Do we index stuff in trade and finance? And that's a lot of what people are talking about. That's what my book is mostly about, not entirely. And then others, the value of the dollar. So let's remember that over the last, over the 21st century, the dollar's been really low. The dollar's been really high. I mean, it's come way up from 2008. 2008 was way lower than 2002. And the dollar was still being used in trade and in reserves. I mean, it varies. And then what you're asking about is the value of the dollar. Like my colleagues, students, and friends from abroad are suffering at the hotel rates here, what they're paying for a meal. Everything seems like a fortune, especially if you come from, say, Korea or Japan.
Oh, yeah.
And that's an example of where my gut feelings it's going to come down but it would have if Harris was elected. This isn't a Trump thing. It's just when it's really high, there's a tendency to come down.
Okay, I want to jump quickly to stablecoins. Because that's another thing. The Group of 30, in fact, there's a great report. You can get it online. You can get a paper version of it. You led that group, and it seems to me you're in crypto. You have some bigger questions about. But I think you've been seen as somebody who does see a lot of risk with stablecoins, but basically thinks they're going to turn out okay.
Yeah, I think that's accurate. I mean, I think stablecoins are in a way the killer app of cryptocurrency and the most important thing. But they need to be regulated in a similar way to how you'd regulate a central bank digital currency that the central bank issued. And in particular, the Genius Act, that was what was passed in July 2025. It wasn't a Trump order, it was passed by Congress. It is bipartisan, it's not just one party. But the Genius Act tries to say, well, stablecoins are like digital dollars. Let's make everything parallel. I go to Bank of America and withdraw cash from my bank account. Particularly if I take out more than $3,000, that'll get reported. Or later, if my tax auditor wants to see what withdrawals I've made, they can see it. But once I'm handing it out, once it's left, they can't until it reenters the system. And they tried to design stablecoins in a way parallel to that. But the trouble, and I understand about the blockchain and tracing everything, but you really can't with pseudonyms and mixers and everything. It's expensive to trace things. I actually think if it wasn't expensive, the demand would evaporate. We can come back to that. So they tried to design it that way, and the problem is that stablecoins can be used in place of debit cards and electronic transfers and every electronic payment. Those things are all very traceable. Not easily, there are laws, there are protections, but it doesn't cost $100 million to trace them. And the stablecoins were designed so they even though they compete with those, they're not traceable. And I think that's a huge problem. There are proposals out there for making them traceable, and eventually that's what's going to happen. I wouldn't say the government sees everything, that's an exaggeration, but they're going to make it cheaper for the government to observe. It'll be more parallel to bank accounts.
Okay, if I'm a regular person and I'm thinking, what's he talking about? What is a stable coin? Why would I want or need one? I'm fine with my bank account, I'm fine with my credit cards. What's a stable coin going to do for me?
Well, this is something probably coming in some form, even if your bank's issuing it. And it's just a digital way of handling cash. Everybody has Venmo, for example, or something. Actually, I don't, but a lot of people have that. Yeah. And Venmo me the money. You'll be able to do that with the central bank digital currency. You'll be able to do larger amounts.
Okay.
It'll be instantaneous. There's no credit risk or trivial credit risk. So that's very attractive. You can do it at a garage sale. The Fed has come out with something to parallel that a little bit with Fed now, but there's scope to do this. This is a good idea. This is really important. I think that's not really the big use. The big use is in international transfers, underground transfers. The Russians and the Chinese use stable coins to avoid our detection. And my book discusses how 20% of the world economy is underground, undetected by the government. And Bitcoin, stable coins are very influential and competing with the dollar there.
Okay, and that's when they're going to have to watch out. Can I ask you a little lightning round, okay? because I want to ask you about some specific countries and currencies. Let's start with Japan, okay? They've got Governor Ueda now for almost a couple of years. They've started to hike rates after the very, very aggressive Kuroda years of, trying to get out of deflation. Anyway, so after we've seen the yen weaken, bond yields rising. Are they on the wrong track? What's going on? What's going to happen to that exchange rate, dollar-yen?
I think it has to appreciate 15 or 20% over the next 2 or 3 years. It's way undervalued. Exactly the dynamic, and I mentioned the business about stock markets and stuff, but the Bank of Japan's probably been very cautious about raising interest rates because after decades of really low interest rates, they have debt stuffed into the whole financial system. There are parts of it that can handle higher interest rates, frankly, because the stock market's gone up a lot, which has benefited some big banks. There are a lot of regional banks, the postal savings system, which is very big, the central bank, which have a lot of trouble with higher interest rates. It's not just interest rates, so I want to just underscore the point that even though we don't understand it, when you're really low or really high, there's a tendency to move gently back to equilibrium.
And of course, it seems in my experience dealing with currency and currency traders is they push a trend a long way, and as far as they can, all of a sudden, boom, we'll see it moving again. How about the euro? Because I have a lot of stories now. Oh, deflation. That's what ECB's facing. That's what they're facing there. And big fiscal problem. Almost every country does, but that they can't. France, Italy, they can't take any steps, won't take steps. And meanwhile, the ECB is kind of, not papering it over, but taking the steps it needs to help keep it all in balance. Where's that going?
Well, that's a very tough call. I tended to be what I would describe as constructive. So at the beginning of the year, I thought people should diversify into Europe, which has been okay as an investment. There's this famous saying, sometimes we don't exactly know who said it, but attributed to Winston Churchill. The Americans always do the right thing after they've tried everything else. And I think nowadays it's more attributable to Europe. They have just gotten everything wrong. I basically would describe Europe as California without Hollywood or tech, and they're just not doing well. And I think they need to figure out a way to have electricity in Europe. They need air conditioning in the summer, they've suddenly discovered. They need to figure out a way to defend themselves, which isn't just about Trump. If Harris had won, she wanted to cut the defense budget. Well, we weren't going to be defending Europe, but we weren't going to be intervening much in Ukraine. So, they need to they need a dramatic change. And, call me crazy, but I think it will happen because it has to happen.
So I'm thinking also in terms of reserve currencies, et cetera. China. I mean, they're doing great, certainly on AI, but they still have their economy's kind of messed up in a lot of ways after the housing mortgage crisis and so many things they have to deal with, and even still getting to be better consumers, right? So when you think of where their currency's going, is it anywhere near close to? And people think, I guess in Asia in particular, they can have more of these arrangements.
They can make the rules, of course.
But not for the world, not to replace the dollar. Or can they?
No, they're going to take market share. They're not going to replace the dollar, but they're going to take market share. I think even the euro is going to take market share. The euro lost a lot of market share to the dollar after the euro crisis. It's gradually regaining it, even though the euro is lower than it was back then. And China's going to regain market share. They're absolutely consciously moving to do it. Being the dominant currency is not just about what do you use to buy something. It's about information. All of this information goes through U.S. regulators, the U.S. banking system. The Chinese, they don't want that. They've seen what we did to Russia. They've seen what we've done to other countries. They don't want to allow that to happen. So they have to establish themselves. And part of establishing themselves is forcing other countries to also use it in their trade and gradually in their finance.
So really quickly, Venezuela, the big news that they've actually gotten the head of the country and his wife. They're going to go on trial in the U.S., and this is something Trump's been pushing for very quickly, hard, and they've succeeded. Bolivar, is this just, see what oil does, or what would you say about what's happening now? And this is it's a pretty important thing certainly for the northern part of Latin America. Or the South America.
We're speaking, and we're not 24 hours into it. So questions: what happens? How can we establish a stable regime? You break it, you own it. We don't know we don't know what's happening. But actually, my book has a bunch about Venezuela because I saw it as being quite important. And my editor said, "What do you have Venezuela in there for?" And I explained all the different reasons. I thought it was quite central to this fulcrum in Latin America. So here we are.
Okay, final question. Dollar up, down, sideways?
Down.
How far? How much?
I mean, I think it'd go down 5% this year, 6%. It still won't be at equilibrium.
Okay. Well, we have a lot more to talk about when you come back next time.
A lot more to talk about when we come back next time. What a pleasure to speak to you again.
Oh, it's been fun. It's been so great. Let me just show this book. I love this green color, by the way. It's so pretty. Our Dollar, Your Problem, and they have to, or in our next conversation, they have to read the book to know why that's such an important quote and who actually said it.
Next conversation.
Okay. Well, thank you so much. Ken Rogoff, he's a professor of economics at Harvard University. He's former chief economist at the International Monetary Fund, and so much more. And again, great book. Check it out. Thank you so much, Ken.
Thank you.
I'm Kathleen Hays, and this is Central Bank Central.